Welcome to my channel, Learn and Earn, to live your life on your own terms. Corporate tax cuts done. Recapitalization of public sector banks done. Providing funds to cash trap reality sector done. Putting money in the hands of rural people done. Spread of interest rate cuts by Reserve Bank of India done. But why? Even after taking so many measures by government, Indian economy is still not picking up. Why Indian economy is down? What is the reason of its fall? And when can we expect the Indian economy to recover? Now, as I've already said, the government has taken a lot of measures to bring the economy back on track. It has reduced the corporate tax. It has capitalized the public sector banks. It has provided funds to the cash trap reality sector. More money in the hands of rural population, and there have been various interest rate cuts by Reserve Bank of India to improve the demand in the market. But still, things are not improving. Why is it that the economy is not showing results yet? Now, the reason is the credit growth is slowing and tax collection are now falling, with power demand down a startling 11% in October and November. Now, over the last 2 quarters, it's been seen that the growth in the credit, that is, the amount of loan people are taking for their consumption and for opening business, doing various sort of activities, it's reducing. Credit growth is going negative, it is slowing down, and tax collections are even falling. The power demand is also decreasing because less number of factories are operating. It's very difficult for India to get the GDP growth rate above 5% for this year. Even if the inflation is under control, the government may not be able to bring the economy back on track. Now, the causes of slowdown are almost known, but the solution is still based on trial and error approach. Now, people believe, the economists especially, the cash squeeze in the non-financial banking companies, which was due to IL&FS. The entire NBFC sector was in a cash crunch. There was no liquidity. It was accompanied by global demand slowdown. So the market in the global economy was very slow. In fact, it is still undergoing negative growth. Not much can be done with the global growth, but delayed transmission of interest rate by banks is hampering the domestic demand revival. The banks are not ready to transfer the reduction in the interest rate by RBI, because of which the demand is not improving. The demand is still stagnant. So the slowdown in demand is largely an outcome of the large last year liquidity crunch. And in order to reverse the slowdown, RBI needs to inject more money. This year, 30 billion worth of liquidity has been put by RBI in the system. Another 10 billion is expected. However, for every rupee injected by RBI into the system, it takes about 6 to 9 months to multiply into a credit of 5 rupees. Therefore, there will be a long gestation period before the demand comes back. So even if RBI puts money into the system, it'll take 6 to 7 months to show its effect. And despite low interest rates and surplus liquidity, the borrowing cost remains high and credit risk appetite is low. Sections which were previously taking loans through non-banking system are the worst hit. Now there has been a series of data which has shown a historic fall in power generation in October, which is a big concern for the manufacturing sector. Now the question remains, what will it take to revive the growth? How will the economy come back and the economic activity increase? With the union budget approaching, expectation of reduction in personal income tax is rising. Lower tax regime will again give a room for higher spending, which will boost demands for white goods, travel, etc., but may not help the people to buy or do large spending. So even if the government were to go for further tax cut, it will come at a cost. Already in a tight spot on the physical deficit, the physical deficit will definitely impact the government spending. We have already seen how the telecom industry is reeling under pressure and it is seriously under a lot of trouble. And these sectors, if addressed in a negative way, this will again impact the fiscal policy of the government because the government will have to pay for these companies. Now, since India's macroeconomy and several parameters are downgraded or are down, because of which the country's GDP growth forecast by eminent institutions like World Bank is getting decreased. Now, this is something which is really serious, and the government needs to take proactive measures to bring the economy back on track. And I'm sure that in the days to come, a positive way to handle the situation will be shown by the government. Thank you.